guys going to leave the shutter like that? It's not going all the way down? Oh, okay, okay, okay. Good evening, ladies and gentlemen. I'd like to welcome you to our weekly investor forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. I'll be joined today by our very special guest, Executive Chairman Christopher Berry and CEO Gary Parrott. And our special speaker and guest today is Jeremy Barnes, Managing Director from Future Energy Sources Company Limited, better known as Fesco. We encourage our viewers to post their questions on social media and to remember to tag us with the hashtag #MILInvestorForum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel. We'll also be featuring a market segment on foreign exchange, so be sure to stick around until the end of the program. Future Energy Source Company Limited was incorporated on February 4th, 2013, and would go on to make its very first fuel sale in November 2013. The first Fesco branded service station opened in Mandeville in 2014 and has since expanded to 14 branded service stations island-wide. Fesco recently opened 2 additional service stations, one at Ferry on Mandela and the other at Beechwood Avenue in St. Andrew. In the commercial space, Fesco is known for providing efficient, reliable bulk fuel to the manufacturing, construction, and transportation industries. Fesco is coming off an especially successful year in 2021 when it was listed on the Jamaica Stock Exchange. I take this moment to remind you, if you're seeking to expand your portfolio or embark on your very first investment journey, Mayberry Investments Limited can guide you into achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Our social media handles should pop up somewhere on the screen. Now I'd like to introduce my guest for this evening. Jeremy Barnes is a senior executive with extensive experience in operations, management, financial analysis, and financial management. He has over 20 years of experience in the fuel trade, holding positions of dealer and managing director prior to his engagement at Fesco. He holds a Master's of Business Administration from the Mono School of Business, UE, and a Bachelor of Business Administration in Finance from the Zikling School of Business in Baruch College in New York City. There he graduated summa cum laude and was the recipient of the Irvin Fromm Academic Scholarship for International Finance. Jeremy is a former Chief Financial Officer and Chief Operating Officer of Marathon Insurance Brokers and Federal Capital Group Limited. Today he'll be giving us an investor update on Fesco. Welcome, Jeremy.
Wow, sounds impressive.
Great to have you here, buddy. Great to have you here. Yeah. Also online, I think we have with us our CEO, Gary Parrott. Welcome, Gary.
Hi, guys.
And later on in the program, I hope we'll be blessed with the presence of our chairman, Mr. Christopher Berry. So, Jeremy, yes. Over to you. I think you have a presentation for us.
Yes, I'd like to first thank you, Dan and Mayberry, for this opportunity to speak to our stakeholders and shareholders. And yes, we're coming off a very good Q3, consistent with the growth that we've been having all year. And yes, we do have a Q3 investor presentation.
Thank you. Go right ahead, Jeremy.
All right. Can I go to the next slide? So this is basically the agenda for what I'm going to speak about, which is just an overview of the transportation fueling industry. Just to get everybody familiar with the industry. People might know it, but they might not know the distinctions that are being between the different parties within the industry. I'm going to give you an update on the locations, highlights, key updates, some financial highlights, where we are market share-wise, And just a timeline for Fesco and, where we plan to go in the next about 15 months.
Okay, excellent.
Yeah. All right, next slide, please. All right, so there are many players in the industry, from importers to the refinery to storage. All that's, pretty much on the side like Petrojam. Then you have intermediaries such as Fesco, who are marketing companies. You have the haulage contractors and the drivers that bring the fuel actually to the stations, and then you have the retailers. Where does Fesco operate? Fesco operates primarily at the marketing company stage. So before we came public, we only operated at the marketing company stage. Now, since we opened a station at Beechwood Avenue, and now we're also in the retail space. So we both operate as a marketing company and a retail company. What a retail company does is we actually dispense gas to the public. We sell it to the public. We serve you, and all that operational things that attend to that. Next slide. Right, so now we're currently at 16 locations. We started with 14, and then Ferry was opened, and then we opened Beechwood Avenue. Ferry was opened about July 15th, and Beechwood was opened, I think, November 2nd. Both were a little bit behind schedule. I think when we did the prospectus, we envisioned Ferry opening from, I think, Q1, and we envisioned Beechwood opening Q2. But surprisingly enough, and we have to really give thanks to all our patrons, that even though we opened each station a little bit behind schedule, and our schedule was aggressive, the patronage has been excellent. Actually, we've been doing better than we thought we would have done. And it's evident in the numbers. Even though we started late, so we're still on target to make the profit projections that we made in the prospectus.
Excellent.
So we're really grateful to all you customers out there that patronize our business. We appreciate it. Key highlights. All right, when we launched the IPO, we're about $318 million book value. As of December, we're up to about $718 million. That's some, tremendous growth. In that, a lot of it is retained earnings. Plus, we raised about $223 million via the IPO. So, we have strong balance sheet growth. Year-to-date profits were about $171 million before tax. For the entire year ending March 2021, our net profit was about $108 million. So we've even surpassed that. And we have obviously surpassed what we did last year up until December. We're about $62.6 million above our audited numbers for a full 12 months. And we're about $78.6 million above where we were last year at this time. As I said, despite COVID, and believe you me people, COVID is real. It has disrupted supply chains, construction, everything, you name it. Prices of raw materials from cement, steel, to availability of labor. We do have an outstanding team that we're able to bring off or pull through, especially Beechwood Avenue, within 10 months. Our construction had started in January. We're able to open in November, and really grateful to the team and to everybody involved. Ferry, again, was an outstanding project by the owner and director and the Chorus family. I think a lot of people in Kingston didn't really know Fesco as a brand, as a household brand. But I think with the introduction or the opening of Ferry and Beechwood Avenue, more people in Kingston and St. Andrew can actually see the brand. And they see the brand, and I think they really like and are attracted to the brand. We offer, great facilities to our customers. We offer value. And it's been evident in the response that we've been getting. It's been overwhelming, and again, I thank everybody out there for their support. When we go back and look at the prospectus, what do we want to do? We wanted to increase profitability, and we are significantly. We wanted network expansion. We said we're going to open 2 stores, and we did. Market share growth, we anticipated that. We started at about 4.65% when we launched the prospectus, and we hope that would reach about 7% by December. The numbers aren't in, but based on our numbers, we look back at 2020 and 2019 numbers and where the industry was patterning for the year, I believe we have surpassed our expectations. I believe that we're about between 7.3 and 7.6% market share as at December. And LPG, which is the big thing, big next step for Fesco. Yes, we're on track with that, and we want to bring that to a launch within 24 months. So we have about another 15 months to go. Yeah. Next slide, please. This is just a summary of the performance of the company, which was outlined in the Q3 report, available on our website and available on JamStockX website. Again, it outlines, significant increases in profitability, balance sheet growth. Again, the major highlight is that year to date, we made $170 million net, which surpassed our 12-month audited last year, and it's a strong growth. And again, it's growing. Each quarter we're building up on our successes, and it's not just gas stations. Again, in the introduction, you mentioned industrial fuels and servicing a lot of the construction and manufacturing sector. That business for us has also been growing, and again, we're grateful to our customers that see value in the services that we offer. Next slide, please. Okay, so this is just giving you some highlights, and where we were versus where we are now, versus the audited, and versus our forecast. The audited are for 12 months, and the forecast was for 12 months, but the performance looking at is only for 9 months. So as you can see, we're pretty much on target or exceeded targets and performances for last year. I highlighted earlier that our market share estimated, again, the numbers aren't out for the industry. We're about 7.3 to 7.5% as of December. Strong growth, strong same-store sales, and strong new store sales. Can't go into the details of which stores and how much they do, and that's competitive information that is not available to the public, but suffice it to say we're growing. Yeah. Next slide, please. Okay. So looking back at the year, Q1 was the IPO. We raised $223 million successfully. Again, we thank all investors. I think we had about 4,500 people who actually bought shares at the IPO. That was really, I believe, and I'm really grateful again. I thought it was a big achievement to bring in 4,500 individuals for a junior market company. I think at the time it was, at or near a record. And again, it shows the support and the affinity that people have for the brand and the investment opportunity in Fesco. For Q2, we brought on Ferry. Again, it's performing beyond our expectations.
Excellent.
And again, we're grateful to the public, because this is the public that gives us our successes. Q3, we brought on Fesco Beachwood just for fuel sales. That's where we started. Construction is what it is. You don't get the full billing, at the outset. So, in Q4, we're going to open a convenience store. In addition to having a convenience store, I think we mentioned earlier that we're going to have a water store there. We're going to sell our purified bottled water. In addition to that, we're going to have refill service. And we're going to have, within the convenience store, Mr. Breakfast, lunch, and dinner to go. It's a QSR project that we have with Mr. Breakfast. We believe that it will add to the destination of Beachwood. We believe that people are going to come to Beachwood Avenue for the experience, and we believe that that will all go well for the sales, the brand affinity. Yeah. What we have also done, our plan to do in Q4, we're increasing our investment in real assets and equipment. In looking forward to going into the LPG space, which is it's very capital intensive and equipment intensive, we'll start making investments and deploying capital to acquire assets. So, it's a cylinder heavy business or storage. Every customer basically has a storage facility at their home, a cylinder. So going forward, we'll be making investments in cylinders. For the next 15 months, what we're going to be doing, we're going to be expanding our fuel network. So we'll be looking to add new stations to our network. We'll be launching new products. There'll be new products, within the market space coming soon. And in addition to that, we'll be, looking to do the LPG. Right now, we have at our Beechwood Avenue station a card, our fleet management system that allows our customers, corporate customers, and small businesses to be able to prepay for gas. And they basically get a credit card or a card, a magnetic card or a FOB, and they're able to manage their fuel consumption. So they have a drive where they can set a limit, they can put the type of fuel, and they can get real-time information who took how much gas when. And that information is now electronic. There's no need for handwriting, data. It's very efficient, and it's been taken up by quite a few customers right now. So we have some new exciting things coming at Fesco, and that's one of them. And that's basically my short presentation. What I said, you can look out for us coming closer to you with new locations. Typically, a gas station takes about 3 years from planning to the day open. So we're on for each station, we're at the various different stages along that path. But, within the next 15 months, we'll be having new locations. We're going to be going into the LPG space, and we'll be offering new and exciting products with the technology that we have. We invest heavily in technology, and we'll bring in those additional services to our customers.
Excellent. Thanks for that, Jeremy. I do appreciate that. And I would like to give you a moment to mention a few of your major directors. So I know you have Hugh Core on board the team, and Hugh, we know Hugh well. Hey, Hugh, big up yourself. Congratulations on the Ferry location. You've got your dad and quite a few other stalwarts. Do you care to name 2 or 3 just for the benefit of others?
I don't think I can name 2 or 3.
You
I
get
think
yourself in trouble.
Yeah, I have to name everybody.
Yes.
Well, I first have to start with the 5 that founded the company.
Yes, please.
Lyndon, Trevor Heaven, everybody knows him as Trevor Heaven.
Yes, Trevor.
Hugh Core.
Hugh.
Trevor Barnes, my dad.
Your
you
dad.
have Junior Williams, and you have Errol McGaw.
So those are the founding 5.
Those are the 4 founding 5 that all own stations within the network. Then you have Vernon James, who's at NCB.
Yeah, Vernon has a gas station.
No, not yet. Vernon, not yet. Hopefully one day. I have Belinda,
Yes.
who is, I think she's at Proven.
Yes, yes.
You have Harry Campbell from Cornerstone.
Okay, good deal.
You have Ethan Parkins.
Okay.
He's excellent. He's our lead independent director.
Vernon has 30 million shares. That's what Vernon has.
Vernon and Ethan
are
pretty big shareholders.
They've done well.
Yes, we have Gloria DeClue.
Yes,
who's an attorney.
Yes.
And she's she assists the board also. Yeah, as a director.
Excellent. Well, thanks for that. Appreciate it. So, folks, let me give you a little bit of the Mayberry's perspective on the share. It's just our usual little bit of a financial overview, and then we're going to jump into some Q&A, folks. So I encourage you, if you have any questions, please feel free to post them out on our social media site. And as we get onto the program, if we have a chance, we'll look at some of your questions as well, too. So first up, congrats again, Jeremy. We think Fesco is a great company. You obviously did exceptionally well. You went to the market to raise $400 million. You did exceptionally well. The general pool was only $140 million. And I remember subscribing and only getting 43% of what I was interested in, but that's fine. I bought the share on the open market at $1.05. I got reasonably good volume, and I've watched the value jump straight to over $4, which has actually pleasantly surprised me. What have they done in the last 9 months? They've grown their turnover by 84% to $8 billion, grown the gross profit by 73% to $246 million, managed to control costs somewhat, and so that's flowed straight down to the bottom line, where you see the net profit increasing to $171 million, or 141% increase. Total assets are now up to $1.7 billion, and they've grown shareholders' equity by 153% to $713 million. And the markets rewarded them with a very healthy PE. It's now trading at 58 times. Our junior market typically trades at 20 times, but I'll explain a little bit about that to you guys as we move on. The trailing earnings are, in fact, $208 million. And I think why it's trading so richly is the market is looking forward to the future growth in profits. In their own prospectus, they predicted 1 year out that they would grow profitability to 264, 2 years out to 362, and 3 years out to $402 million profit before tax. The market clearly believes you guys, Jeremy.
Yeah.
I think you're going to get there. And so we see on a forward PE basis that the market's clearly bought into the idea that this is going to be a company making $400 million profit after tax in short order. And I personally have no doubt that you're going to get there.
Yeah.
So congratulations on the performance again. Next slide shows the results by quarter. And you can see a very nice step ladder here from Q1 to Q2 to Q3. And I expect to see even more growth again in Q4 because of the full impact of the 2 gas stations in that quarter, with the last gas station opening in November,
Exactly.
I believe you said. And so we think that the profitability quarterly will continue to grow. And then on the last slide, it shows just the movement in the share price over the last 6 months. And again, Vernon, big up yourself. I wish I had 30 million units too. This, I don't know what to say. I bought at $1, folks, I'm not gonna lie, and I sold some at $2.50, and I'm kind of regretting it. But at the end of the day, I mean, in which market can you get an IPO and make 150% gain almost risk-free in 6 months? It just doesn't happen in many other places. And again, I think it has more legs in the future with profitability headed towards $400 million, the new LPG business coming, new lines of products. I feel pretty confident you're going to get there.
Yeah.
And we'd love to have you back in a year's time to see if how well you've done in that journey. I think you're going to do better than the prospectus, and it's obvious to me that you guys are being fairly conservative in your prospectus.
Absolutely, absolutely.
Good deal. So on to a few questions, Jeremy, and I can see that they're coming in fast. First one. The government projects that by 2030, the national fleet will compose of 12% electric vehicles.
Right.
Is Fesco positioning itself to be a part of the Jamaica Goes Electric initiative?
Yes. The short answer is yes. Some of our stations already have infrastructure to have solar charging or have charging for cars. At present, to be honest, it's not a business. Mm-hmm. It doesn't generate a return on investment. Charging, that is. It's something that's subsidized by manufacturers of cars. And I'm not just talking from a Jamaican perspective, I'm talking a global perspective. The CEO of ConocoPhillips spoke about it, that there's no ROI.
Yes.
So as a company, we have to be careful. We can't just spend shareholders' money on ventures that can't generate a return.
I agree.
But essentially, yes, we're on that path. We look at it as a convenience, and we're positioning our company to take advantage of opportunities that will come up in the future, yes.
Yep, I certainly think your Ferry location would be a great location to have some charging stations.
Yeah.
And I share your sentiments that, I spent 16 years in the energy space, and I just don't see where electric cars are going to work in Jamaica for the next decade, folks. Not on JPS electricity. So if you can charge it with solar panels or something, maybe, but the reality is...
You understand the business very well.
Yeah, man, the reality is the electric cars are a nice thing to have, but I don't think we're going to be ready for it for the next decade. What I'd like to see the country doing is focused on pushing the renewable energy agenda.
Correct.
And I can say publicly as a director of Wigton, I am disappointed in how slow the government is moving in terms of executing on bringing renewables to Jamaica. We've had nothing in the last 4 years, guys. So please, let's get on with the RFPs to ensure that Jamaica does, in fact, push this renewable energy agenda, which is going to help to bring down the cost of energy and ensure the country goes green. But enough of the energy space. Second question, with climate change concerns and Jamaica wanting to reduce its carbon footprint, are there any plans to eventually go green or carbon neutral? How do you factor that into your operations? Absolutely.
Even Beachwood Avenue, we built it in such a way that we already have a solar panel room. So we have the conduits running underground. So yes, the short answer is yes. We do see a future where our offices are powered by renewables, solar PV. Right, solar PV. And at many of our other locations, they're actually moving towards implementing that as we speak. I think at Ferry, at Old Harbour, And, I think even Mandeville right now, we're looking at putting in, renewable energy to reduce our own energy consumption.
Yep, it just makes good sense.
Yeah.
It really does. Third question, and then Gary, get ready. We're coming to you as the third largest distributor and marketer in the transportation and fuel space. How has going public impacted Fesco's overall market share and presence?
All right.
So we heard a bit about the market share, the presence.
I wish we were the third, but we're the third largest local.
The third largest local.
And that was at IPO. I think we're moved to the second now, or just about the second, which again, we're really grateful for the market share growth. How has the IPO affected that? Positively. I've been on the forecourt of our service station at Beechwood Avenue, and there are so many people that come there who are shareholders. I did not know that there'll be so many people coming to our station just to support because they are shareholders. And it's not their support. I guess it translates to the bottom line, and people see that and they recognize that. And in and above that, they're getting very good value for their money. It's one of the lowest price stations, and then the additional services, the cleanliness, the environment, really create a situation where people get value from the station. And yes, short answer is yes. Going public has assisted our business.
Excellent. Happy to hear that.
Yeah.
Gary, you've been quiet so far. I will afford you the opportunity to ask Jeremy the next question. Gary, can you hear us? Okay.
I was speaking up a storm in a muted mic. So
Happens to all of us.
I know, my brother. So welcome, Jeremy. I have two questions. At what point do you think you will reach your optimum gas station array in terms of how many gas stations you have before you start to see diminishing returns? And the second question is, we're all expecting a revolution in terms of, electric cars, etc. And you alluded earlier that there isn't an ROI. But with the prevalence of solar, etc., how do you see the future of the petrol business?
Okay, interesting questions. Let me try with the first one. If you can repeat the first one.
The first one is the optimum array of stations.
Oh.
So you currently have 14. Are you planning to go to 1,000? Is 17 optimum? There's a point at which you get diminishing returns.
Correct.
And so, how your business model is structured is you build out a certain amount of gas stations, then you build out a certain amount of LPGs. You can only have so much convenience. You can have so much branded stuff. What next?
Understood. So right now we're at 16 service stations. Our model, unlike many others, it incorporates a lot of dealer-owned stations, which allows us, from an investment standpoint, to take smaller positions in the actual operating of the business.
Yep.
What we envision is, within the next 15 to 18 months, we'll be at about 20 or 22 stations. We believe we are sufficiently small currently that we can grow. There's a lot of geographic space in Jamaica where we don't have a presence. So we do see where, there's a lot of opportunity to grow. We get calls every day for people wanting to open stations. We get more calls than we make calls, trying to, recruit people to become station dealers. So we do see ourselves growing. There's a lot of room for us to grow. Maybe the market not growing, but we have the ability to grow because we were so small. Remember, we started at 4.65%, just March last year. So there is still a lot of opportunity for us to double. And we're doubling this year, and I think there's still, I don't want to go ahead of myself and project, but there is some doubling taking place, and that'll be going on for, for some time. Where do we see energy in the future?
Yep.
In the short term, there's, people going to be driving their cars, and they're going to be getting, gas at the gas stations. Part of our diversification is LPG. Electric stoves have been with us for decades. I mean, I grew up with an electric stove at home. My mom didn't want us as kids to fry the egg using a gas stove, so she had an electric stove. But she had a gas stove. People like to cook with gas. LPG will be here with us. We have electricity at home, and we still use a gas stove. LPG will be here with us. So we are diversifying which energy spaces we play in. And that's part of how we will, navigate the future. At some point in time, the business will have to change and adapt. And, we're making the preparations for that. Will we become, in 50 years, more convenience than gas? Well, we're making investments now to learn convenience and learn the restaurant space, so that when we do have to make changes, we're actually making it from an informed position. We know the businesses that, can operate.
Thanks for that. So I got two takeaways. So over the next 5-10 years, you're saying you can certainly see you guys doubling your number of retail stores before you get to any capacity constraints or diminishing returns. So
not exactly doubling, but
significant potentially
growth.
You could see significant growth in a number of stores.
Yeah.
And then for the future of the oil industry and the one that you participate in, certainly LPG, you're saying is going to be great diversity. And I share that view, right? There's so many homes where they can switch to gas and they haven't because of some kind of stigma or thought process. And I'll confess, I didn't get a gas stove until 5 years ago, perhaps because I worked at the utility company for the previous 16-year period. But it's been amazing to me to see that the cost that I've been buying LPG at for the stove has moved like by 12% in the last 5 years. We keep meticulously the bills when we refill the gas. So the cost of gas, LPG, 12-15% in the last 5 years. The cost of electricity, 30-40% in the last 5 years. So I think LPG is definitely a good substitute to electricity. And I think as a business model, should do well for you guys. And so we certainly look forward to that. Moving on to our fifth question. I'd skip that fourth one. With plans to open your FYC Refill water store, Express Mart, and quick service restaurant at your Beechwood location, it seems like we have a lot more earnings to look forward to. Tell us a little bit more about these projects.
These projects, yes, they will bring incremental earnings. We won't give you them
big boom.
Giant leaps in earnings, but there is, again, we're a lot about ROI.
Yes.
And, we spend money effectively and efficiently.
Yes.
If you look at our history, we started, or the 5 directors started with putting $180 Jamaican each.
Yes.
So, they grew from, deploying the capital well. So, yes, we believe that the water refill store and the convenience store will, the incremental growth, to the profitability. But what we also believe is that it will create an environment on Beechwood Avenue as a destination, which allow even greater fuel sales.
Good deal.
Yeah.
And I have one question myself, Jeremy. I'm actually concerned about, I don't want to get you into any political trouble here, I'm concerned about Petrojam, the refinery, and where we're going with this. 10 years ago, the upgrade, was $300-400 million. 2-3 years ago, it's gotten to $1 billion. I personally don't think it's feasible to spend anywhere north of $500 million on upgrading the refinery. So the future of the refinery is a little bit questionable. But regardless of which direction that goes in, I mean, how do you feel that this could possibly impact your business, if any at all? Because I'm thinking long term. I don't know where Petrojam's going to be, what's going to happen to it. But as an investor in Fesco, should I be concerned? How do you think about the future of Fesco and how it may impact your business and the business generally?
Well, the future of Petrojam?
Yes.
Are
you concerned about it, and how can it impact your business?
Could it impact our business? Obviously, yes, it could. But it's been a discussion that's been around for, 30 years. And it will continue to be a discussion for 30 years. Fuel security is important. And for that reason alone, I do not believe there's going to be anything that happens that, make fuel unavailable. Plus, we see other players in the market in Jamaica that are importing fuel and provide bulk storage. So from a fuel security standpoint, I wouldn't be too concerned.
And on your business economics, you're not
No.
Storage is a thing, as you mentioned.
Storage is not a thing for us.
Yes,
right now, we're really in, distribution.
Yes.
So we don't take a position, per se, in inventory.
Yes.
So our storage are importing. Maybe at some point in time it will, but that's not, on the agenda right now.
Okay, great. Appreciate that.
Yeah.
Okay, so we have quite a few questions that have come in. I want to definitely look at least 3 or 4 of them. First one is coming from Philip on YouTube. Hopefully you can see it too. And it says, big up my fellow Woolmerian Jeremy. By the way, I went to Woolmer's Sixth Form, folks. Can you tell us about the progress of your plans to provide LNG fuel to the transport industry and what your market for that will look like? So you spoke a little bit about it, but...
All right, so LNG is different from LPG.
Yep. Oh, did he say LNG?
He said LNG.
Very good. Very good.
All right.
So tell us about LNG. Yeah, good one.
All right, so
Thanks,
LNG wasn't factored in as a revenue earner in our prospectus or in our projections. It's a market that we're interested in getting into. We're learning the business. We're learning about whether it will be LNG for cooking or LNG for transportation. I think initially we're thinking about LNG for transportation. It's a little bit put on the back stove because there isn't a demand for it. And again, a lot of what we do at Fesco is really look seriously at the numbers and see what is the ROI. How do I effectively deploy my capital now to generate a return? But we've made it investments in research and understanding the business. So in a short, we're not going to be doing anything over the next 12 months in LNG, in short.
Okay, appreciate that. Second one comes in from Kashween, also on YouTube. Are there any plans for additional service stations across the island?
Absolutely. Every single day I'm either going to a new prospective location or talking to people on the phone about new service stations. Again, our business model allows for the public to partner with us as dealer-owned stations, dealer-operated. So, I mean, if you are interested in putting up a station in a viable location, please call us. We're open to, discussions, yeah.
Good deal. Let's look at the fourth one. How do you estimate the industry volume if that data is not available? So I guess he was wondering about your 7.3 to 7.5.
How do I estimate it? Well, we know data from up to, I think, August 2021, up to August last year. That data is available. We have data for, going back. You look at, we can look at, the trend for the year. The year for 2021 was looking a little bit below 2020. Even if we analyze that slope, that trajectory, that put us a little bit higher. We look back at 2020 and 2019 when pre-COVID, and we put 2019 and 2020 and look at the pre-COVID, that's where we looked at and said, yes, if it was pre-COVID without COVID, it would be about 7.5%. So again, we usually tend to be conservative at Fesco. So maybe when the numbers come out, we're a little bit above 7.5%, but looking back at pre-COVID numbers, we're about 7.5% market share.
Excellent. Thanks for that. And then last one is also from YouTube. With aging directorship, what are your plans for continuity in the business, given some stations are not company-owned?
Why? Somebody threw some words a while ago, some real strong words.
Hugh, they're trying to get rid of you.
If you look at the management at Fesco, pretty young. I mean, I can't play. At my age, I'm Tom Brady's age. So I could be retired from football, no. But we're pretty young. Within even the service stations, you have the next generation. So even at the core, and the core is pretty young. You still have Chris Core running operations. At my dad's station, you have Janelle and Colin and Christopher. Strong leadership behind, with the Magas, you still have Nicholas, young people. So the core of the business, and at Heavens you have Kai, Timberly. There's a generation waiting behind that, is eager to, and I'm showing their stripes. So I wouldn't really be worried on that end. If you're looking at directorship, I think being part of the whole process of becoming public, we expanded directorship because we wanted skills that not necessarily was within the board, but we wanted them on the board. And some of those people again are young. Vernon is a Woolmere and at my age, and Ethan is pretty young. Belinda is pretty young. Harry is pretty young. So and if you look at the image of the brand, the company, we're not stuffy. I'm not here in a suit and a tie or anything like that. It's a pretty young company. We think a lot about technology. You know, everything we do. I think that's one of the benefits of COVID. Every plan that you had to be pushed back, or you had the ability to think more about what you want to do. So if you say, you know, you're rushing out there just to buy a car, maybe I said, okay, fine, I have 4 more months to wait on it. Maybe I can fine tune exactly what I want on the car. If I want 22-inch rims or whatever. So with all our plans that we have done, we have actually taken more time to figure out exactly what we want to do and how we're going to employ technology to it. So I think COVID and all that has allowed us to think more about the business, think about where we're going, plan better, and, you know, you can see it. We're able to execute a station in 10 months.
Excellent. No, that's pretty impressive. It really is. And then last one from social media, and then Gary, I'll come over to you afterwards in case you have one more question. This person says the company margins are pretty thin.
Yeah.
Does the company plan on adding product services that will increase their margins?
Yes, we do. It's people like cheap gas.
Yes.
No, we won't price ourselves out of the market, but yes, we are, you know, bringing technology to the fore, and there will be some announcements pretty soon in the coming weeks.
Yes, yeah.
Of some of the stuff we're going to roll out. Yeah.
Yes, I guess they're concerned about the $8 billion of sales and only $175 million of profits, but folks, don't worry about that. Focus on the profit.
Profits.
Focus on
Correct.
the profit. Gary, I'm going to wrap up the question and A section. One more question to you, if you will.
Yeah, my question is pretty simple. There's so many new entrants coming into the space, right? Who's losing? I mean, the price of oil is going up, so the increase in price can mask volume increases, or more importantly, volume decreases.
Right.
So my question to you is, this growth in revenue you're seeing, is it that you are taking market share or you're creating new markets?
Excellent question. We don't look at market share in terms of revenue. We look at market share in terms of liters of fuel sold. Fuel prices fluctuate up, down, sideways. We don't look at that at all. So when we talk anything about market share, we're talking about actual volume of liters sold. So we are growing. We are really growing. It's not based on the price of gas or anything like that. We're growing volumes, you know, per liter. Is there a shift in the market? There is some. I believe that there are more cars on the road still. During COVID, yes, there was some contraction. There is a value proposition of a Fesco station that is impressive. A lot of them are destination stations, so people go there for multiple services. So especially in COVID, we saw that, where people came to our stations to go to the supermarket, to do money transfer, pharmacy, many different services they could accomplish in one destination. So even during COVID, many of our stores grew, even with limited operating hours, because of the value proposition of the destination. And we have built that into the stations that we invest in, that we're trying to build a destination rather than just a gas station. You will see for ferry, and we strongly believe that. I mean, if I was traveling from Japan, and I have a friend traveling from Japan or from Norway or from New York, and first time to come into Jamaica, I would show them ferry. I'd carry them to Bob Marley Museum, I'd show them National Stadium, but I'd come and show them ferry and say, this is a Jamaican company. Build this station, this futuristic, this impressive building, this is what the company is. I believe it's going to become one of the landmarks in Jamaica, if not already. So we're building destinations.
Excellent. I appreciate that. Thanks really again, Jeremy, for sharing with us. And we look forward to having you back again in the next year to see by how much you've grown the business even further.
Yeah.
Moving along to some of our next top picks, we'd like to look this week at one of our top picks for 2022, one of my favorites, JMMB Group. Now, Gary, that we picked this one at the beginning of the year before the results came out, because I don't want anybody to call us here at Mayberry wagonists. JMMB is one of our favorites, and the results speak for themselves. In the 9 months ended September 2021, they've managed to grow their revenues by a whopping 31%. They've grown their fees and commissions by 58%. And this is translated to operating profit growing by a whopping 55% to $7.98 billion. Their net profit is up as a result by 119% to $8.8 billion. As a result, we've seen their share price already move this year up to $43. It's up by at least 6% year to date in this calendar year of 2022. And guess what, folks? The PE ratio is still only 7.22 times because of how much the earnings have grown by. And so I'm here to tell you that this stock price of $43 is substantially undervalued. At a 10 times PE, I would expect this stock price to be closer to $50, $60. At a 12 times PE, I'd expect the stock price to be $72. And at a 14 times PE, the market average, the main market average, I'd expect the stock price to be a whopping $84. And before you ask me, Dan, where are you going with 12 times and 14 times, bearing in mind that Sagicor trades at 13 times. That's Kosher Group trades at 13 times, and some are trading north of 20 times, Barita and NCB included. Now, the 12-month trailing earnings of JMB is an impressive $11.9 billion. I dare you to find 4 other companies on the Jamaica Stock Exchange that have a trailing earning of $11 billion. You can't find it. This is very impressive, and it's the reason why JMB is one of our top picks. And this price will increase by 30 to 50% in the next 12 to 18 months as the market corrects itself, and we expect this PE to be adjusting much closer to 12 times in the near future, and eventually, hopefully, they'll get up to 14 times. They deserve it. Next slide shows the earnings by quarter, and you know what I love about JMB? In the last 4 quarters, the earnings has grown year over year substantially. Q4, where you see $3.6 billion, that was a 20% growth over the prior year's quarter. Q1, where you saw $1.7 billion, was 100% growth. Q2 at $3.4 billion, 100% growth over the previous year, same time. And this last quarter at $3.1 billion, again, 100% higher than the previous quarter. So yes, they're coming through a bit of COVID, and you might say it's the pandemic blues, but at $11 billion trailing earnings, this is higher than JMB has made in the previous 3 years. So it's the business is growing. It's not coming out of COVID. It's just fundamentally growing. And whether it's their 20% interest in Sagicor Fin, which was not factored into this last quarter, by the way, folks. In other words, they did not make any adjustments for their investment in Sagicor Fin in the last quarter. The business is growing. Therefore, in the fourth quarter, i.e. March of this year, I'm looking for phenomenal results yet again. And so again, I'm here to tell you that this stock price is going to be moving a lot. Looking at the stock price, you can see there's been some movement on the next slide. But again, this is a stock price. On the next slide, guys, this is a stock that has traded north of $50 in the past. They had a APO where they raised over $12 billion at $38. And then shortly after that, we watched the stock price trade as high as $54. So when this stock was at $30, I was buying it all day long. At $32, I was buying it all day long. And at $45, I'm telling you, it's still a great buy. So congrats, Keith and team. You guys have done a great job there over at JMB. I expect big things for you. Gary, any comments from you on JMB?
Bye, 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 bye.
Bye, 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 bye. Thanks, Gary. Next up on the program.
Yeah, what I'll say to you,
Dan. Gary, go ahead, Gary.
Yeah, what I'll say to you, I mean, this is an example of, how you make money in the stock market.
Yeah.
So you've been talking about this stock for over 6 months, if not a year, right? And, for whatever the reason is, people just are not logging on to the stock. But it's not a bad thing because it allows us to buy more of the stock until the market recognizes the value of it. Yes.
I appreciate that so much, Gary, and I couldn't agree with you more. I had a friend gave me $40 million to invest about 3 months ago, and I think we put about 10 million into JMB at $32, and he wondered about the move. And I'm here to tell you, I can't call your name, that you've just made yourself $7 million in the last 6 months, and this stock's going to go a lot further. So I agree with you, Gary. While the market is slow to pick up on it, I'd certainly be encouraging clients to buy, and I think it's going to go a lot of places. Good. Next up in our segment, we're going to look at the decliners and the gainers for the week, starting with the decliners. First up, eFresh, down by 14%. Next is 138 Student Living, down by 13%. Then Cab Brokers down by 10% after being up by about 20%. And then next is Stanley Motors down by 8%, and then finally SRF. And congratulations, PB, on your performance at Stanley Motors, among some of the others who also did well. Gainers, Rock up by 12.86%. Creamy up by 10%. Congratulations, Chris. I know they're having some challenges there. QWI up by 7%, finally getting up to about $1. CPF up by 5.89%, and finally Victoria Mutual up by 4.47%. Let's take a look at our market segment and what's going on in the exchange rate market. So again, we see the hills and valleys, Gary, as usual, that you like to speak about. And now I think we're heading up into a hill, a bit of a mountain for some, where we see the stock price now inching up to $158. And on the next slide, you can see that the year-to-date appreciation on the next slide on an annualized basis looks like 15%. I don't think we're going to have 15% devaluation this year, but we've seen some movement. Gary, any thoughts or comments about what's going on with the exchange rate?
Well, you can't beat the science, Dan. And the science behind it is that we have inflation that's trending towards 8%. And the inflation with our major trading partner, is not as high as that. So you're going to have a built-in devaluation. I think what you have in here is a market basing and it's trying to decide whether to move higher or to pull back. And the probability when you look on this graph is that, the graph might break to the upside. Traditionally, we're in the winter tourist season. December was very good based on the feedback I've gotten. January was pretty soft because of Omicron. But so you're expecting to see a rebound in February and March. So well, notwithstanding that, the problem you face now is that holders of Jamaican dollars, portfolios, they see what's happening on the inflation side. And if they're to bet, they're going to bet that, inflation is going to erode the value of the Jamaican dollar. So therefore, now might be a good time to be in US dollars. So as I said, when you look at the graph, it seems as though it wants to break to the upside. So let's see what the next couple of weeks brings.
Thanks for that, Gary. As usual, we always appreciate your insights. And I do think that the worst of the COVID is now behind us. Over the next 2-3 months, we're going to definitely see some improvements. The economy has to start opening up back more. We've seen a 1-hour shift in the curfew. I expect over the next 2-3 months that we're going to head back to normalcy and that we're going to have a much stronger winter season. Most of the tourism stocks did very well in December. Yes, I agree, Jerry. They said it was soft in January, but we're expecting Feb, March, April, that period to be really strong as the country really just has to learn to get back to business. We can't continue with the lockdowns anymore. We can't continue with the curfews on an extended basis. No doubt they affected the results of Fesco as well too with the opening hours. So we really want to see the economy getting back into strides, and we hear of 6% growth being forecast, but we're still at a level of GDP that's far lower than where we're coming from. So that 6% growth still leaves us at a base that's substantially lower than where we were, and the easiest way to manage our debt to GDP issue is going to be to grow the GDP. So we look forward to getting past Omicron and COVID-19 and growing the economy, which will have positive impacts on most businesses, on our exchange earnings, and therefore hopefully on the exchange rate itself. Well, Folks, it was a great program. To our viewers, thank you all for being a part of our weekly investor forum. I'd also like to thank our very special guest today, Jeremy Barnes, for participating in today's forum. Thanks, Jeremy.
Thank you very much. Thanks for having me.
We're certainly looking forward to having more insightful discussions in the future. Be sure to follow us on social media and to stay up to date with our live streams. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you, viewers, for tuning in today. And remember to keep safe. And to the wise investors, remember, slow and steady wins the race. Goodbye. Boom.